Welcome to Dividend Talk, episode 210. A conversation about investing with Lara, aka Green Pepper.
Dividend Talk is your number one podcast for all things dividend and stock market related with a unique European flavour. My name is Derek from Engineer My Freedom and I'm joined with my co-host European DGI. If you want to learn more about us, please visit europeandgi.com where we have articles on dividend growth investing, including 30 European dividend aristocrats. While you're there, you might as well grab our free dividend portfolio tracker template. We also offer a premium dividend growth service featuring a bi-weekly newsletter which includes stock deep dives, dividend stock cards, and access to our dashboard with over 130 dividend growth stocks. All of this is based on our very own dividend safety analysis. But enough about that. Please grab a cup of coffee and let's get started. Hey, European DJI. How are you, buddy?
I'm good, thank you. Had a bit of a busy week like usual. I think that's my standard answer. But other than that, that's really good. We just had a nice dinner with the family in a nice Georgian restaurant. So life is good. Life is good. How about you?
I'm good. It's the start of the school year, so we get 1 week of sunshine in Ireland. So I take advantage of that. The rest of the year kind of rains, so I'm quite happy. As you know, I always complain about the weather because it's always so miserable here. So when we get a nice day, it feels good. But hey, I'm excited for today's show. We have a guest on. Some of our followers might know her from Twitter. It's Bell Pepper, I think, on Twitter. We'll share the link. But maybe you can introduce yourself and tell us a little bit about yourself.
Yeah, hi guys. Thanks for having me. My name is Lara, and some of your hearers might know me from, as you said, from Twitter or X now. And my name there is Pepper Shares, and I like to share my thoughts on the stock market or the actions I do there. And yeah, thanks for inviting me here.
Awesome. Well, we can't wait to talk to you and get into the main topic. I think the topic will be the path to financial independence. So I'm very much looking forward to that. But before that, we usually start with some news of the week. And European DJ, is there anything on your mind? What happened this week?
Well, for me, there's only one thing we can talk about today, and that's Warren Buffett. He turned 94 today. Yeah. So imagine that, getting 94 and still seeing your compounding in action, still every day thinking about what businesses to buy. I mean, isn't that for me, that would be my dream life, that you're still so fit and so, how is it, clear in your mind that you can still all do this. Yeah. He has still like a small office, an assistant, and just probably reading the newspaper each day to see if there's something in the news about the stock that he would like to own. I mean, what a life. 94. I mean, we had Charlie Munger almost turned 100, right? And this year just died before that. But I feel so lucky that I can still, as an investor myself, enjoy that he's alive and see the annual conferences and everything. So I'm really, really, congratulations, Warren, if you're listening.
Yeah, it's awesome, man. He still looks amazing for 94. He still looks so young and fit and healthy. So hopefully, has many more years under him. But you shared a little caption. I don't know if it was on Facebook or Twitter about his net worth over the time. And at the same age as me, he was just a couple of million ahead of me. So I might catch up with him at some point.
I think the statistic is that at 52. Yeah. He had only 0.5% of the net worth that he has today.
Wow.
So 40 years later. So if I turn to myself, I'm not 52 yet. So if that's, but I will not compound at this rate. I mean, this guy is compounding at, 25% annually or something like that. I do probably, I don't know, total return, maybe 10%, 12%. I have no clue. So that will be half. Yeah, and that's a big, huge difference, of course. But still, it kind of motivates to see that compounding works, and which is really inspiring. And he's also the guy of the quotes, right? So is there one quote that really stays with you when you think about Warren Buffett?
Yeah, for me, it's somebody is sitting in the shade today because somebody has planted a tree a long time ago. I love that quote.
Oh yes,
I
that's
really,
great.
I really like that quote. So it kind of reminds you just to stay the distance and stick with the plan, and eventually you'll see the fruits you'll labor. But I mean,
Yeah.
he's got go on.
I'm sorry. Also, a great metaphor for the stock market, right? Like,
Yeah.
The time in the market beats market timing. So
Yeah,
it's great. Yeah, you have to admire him, right? And he's also such a great example for someone who's leading his own company. Like founder-led business is always a great thing for us maybe to invest. So and he seems so modest. So I also have to say all the best, Warren. Happy birthday. Great.
but the fun thing is, if you look at his investment history, he is a shark. He is as cold as ice, when he buys things. So I don't know if you read his book and everything, but the biography that was written about him, he made specifically early in his career, like he really made those deals that he was the clear winner, yeah, and the others not. And I said he still has such deals, right? That he does sometimes when it comes to, for instance, like was it this oil and gas company or something like that he bought 10 years ago, where whatever would happen, he would still get 10% or something like that out of it. So he always has those deals below it as well.
Right.
If he's not buying on the open market like he did with Apple, but kind of those direct deals. Yeah, he's really a shark there.
He is.
Smart.
Yeah.
Yeah. Yeah.
Definitely.
Nice one. Nice one. So at this point, what we usually do is just to loosen up a little bit, we have this rapid fire round. You don't know the questions. It'll be A or B. And the hope is you'll answer them straight away without thinking. And then at the end, if you want to clarify or change your mind or whatever, you can certainly do that.
Okay.
So I'll hand you over to European DJ now.
Okay, great.
Okay, so the first one is, would you choose to have a guaranteed lifetime supply of free coffee, but never be able to invest a single dollar, or have incredible investment skills, but only get 1 cup of coffee per year?
B, unfortunately, yeah, hard one.
Good. Then the next one is, do you prefer Allianz as an insurance company or the Dutch insurer NN Group?
Allianz, A.
Good. Bundesliga or Premier League?
Premier League is more successful, but I have to choose Bundesliga.
Good. 1,000 euros a month for life or 300,000 in your hands right now?
A.
Okay. An expensive husband, so a husband with expensive hobbies, or personally having a very expensive car?
Expensive car.
And then the last one, America or Europe?
For investing, Europe.
That's up to you.
Europe. I choose
Good.
Europe.
Cool, thank you. Would you like to clarify one or two of your answers?
I think the first question was really hard with the coffee because I love my coffee. But yeah, I can still drink tea, right? So
yeah, of course.
Gotta live with this. So what did you say? Like having great investment skills?
Yeah,
right away?
it was. Yeah. So it was. Would you choose to have a guaranteed lifetime supply of free coffee, but never be able to invest a single dollar, or have incredible investment skills, but only get 1 cup of coffee per year?
That's really mean, but okay. I would take B and drink tea. So
cool.
Yeah.
Yeah, and maybe for me it's interesting. You chose Europe and you were thinking about investing, and this is very interesting because this is always a very polarizing topic. There are people that just don't want to invest in Europe, as an example.
Yeah, I know. Yeah. Yeah, it's tough. In my portfolio, I also have like 42% American stocks, but also like a huge part in German stocks, like 21%, and everyone will be like, oh my God, how could you invest in the DAX, right? But hey, today we hit a new all-time high in the DAX.
Nice.
So with the falling inflation and lower interest rates, yeah, the market is pretty happy. So we will see what will happen. And lately, I was wondering how America will do with the next election. I know political stock market has, it's a German saying, has short legs.
Okay.
So it wouldn't be too influential. Yeah, but when you see the rally in the Nasdaq and Dow Jones, I'm not sure how this will go on. Though our friend Warren Buffett said never bet against America, right? I'm not so sure. I think maybe Europe is a bit more politically stable. I'm not sure. I'm still torn between America and Europe. Why not have both?
Yeah.
Right?
Yeah, I think that's sensible. I think most Europeans probably have that split. They probably have a fair percentage of US stocks. But if you go to US, and any guys or girls we've had on the podcast from Canada or the United States, they have very little European exposure. It's all very America based. But we've got some great companies, and Germany in particular has really good ones like Siemens. I love Siemens and Allianz that EDJ mentioned.
Me too. Own both.
Yeah, we might have our own saying, never bet against Europe.
Yeah. Yeah, but America is quite successful, right?
Yeah.
When you in the Nasdaq, you can't beat them lately with the Magnificent Seven. So yeah,
we have some catching up to do as Europe when it comes to innovation, specifically in technology. I think that's my biggest concern. And then, for instance, also one of my concerns is that Germany is not really there anymore, right? Which used to be. Germany is really the powerhouse of Europe. So if Germany, doesn't get their schwung back, then we suffer in Europe effectively. Yeah. So I hope we can turn that a little bit around, at least from innovation point of view, because I think and technology, because I think if we're thinking about wind energy and everything, we have top-notch technology here. But when it comes more towards the information technology, then with ASML, I would say it's really a powerhouse. We have SAP, but we can't name the list that America has, of course, in Silicon Valley. That's unheard of.
Yeah, absolutely.
Okay, so we might get into some questions, and I think a good place to start, Lara, is to maybe have a look at your investing history. What does it look like? How did you get involved? So on.
Yeah, so I've always had an interest in the financial markets, but my active journey into the stock market began in 2020, just before the COVID crisis. So the background was we sold a house, so we had some cash, and then we finally decided hey, let's go to the stock market. It was very a little bit blindsided, and then we got hit by the COVID crisis. So we experiment our first crash pretty close after the entry.
Wow.
Yeah, that was pretty hard, but also it was we were calm at the same time. Either we will find a cure for this disease or not, and if we don't, then we have other problems than our stock portfolio, right? So we just didn't do anything, and even bought some stocks when they went down. So after all,
that means you
That
means you come already in with a very cool mindset, like chill mindset into the stock market, because I think most of us, at least I remember myself, the first time I bought for €100 stocks when I was 25, and I was watching it say, oh, it's 1% up, whoa, it's 2% down, it's going to crash, and I was talking about €2. But it's very amazing that you had already that kind of calmness in there. Do you know where that comes from?
We said before, we only invest money that we know when we lose it all, we can still manage, right?
Great.
That we did. And also, like I said, probably we find a cure for the disease and will survive, hopefully, not everyone, unfortunately, but that was what made us calm and not selling, of course. That would be the worst decision, right?
Yeah.
Yes. So that was our start into the stock market. And that was pretty cool.
And you mentioned you had also a bit of interest before. Was that already when you were a child or something like that? Did you had like a role model that was talking about it?
Yeah, well, my father, I didn't know him very well because he died early, but he also had stocks back then. And yeah, that was why I was always like, not as a child, but growing up, I was interested in what is the economy doing and stuff. And when we started actively investing in the market, the approach was quite simple. Just if we know the company and like their products, like BMW, then we go, hey, let's buy BMW, right? And the moment we received our first dividend was a true eureka moment. I don't know if you remember, guys, when you got your first dividend to your bank account. It was,
yes,
whoa,
of course. Like
this?
I saw €1 or 50 cents or something like that.
Yeah, well, but hey, I didn't do anything and received money, right?
Exactly.
So, and that was when we realized how powerful it can be to like if you go long term in a stock that pays your dividend, then you have a steady income stream, and that's when we shifted our focus more on dividend stocks.
So did you start out wanting to do dividend growth investing, or was it just you invested in and someone by proxy, they paid you a dividend and then you found dividend investing?
Yeah. First, when we first invest, there was no focus on dividends. This was like the side effect.
So who was the first company to pay you dividends then? Who gave you that unicorn?
I have to admit, I don't remember exactly. Okay. I don't remember exactly. Well, maybe it was like a Microsoft or something. I really don't remember. It just that's unfortunate. Yeah.
And Lara, how was the learning curve then? So okay, you get your first dividend, you get this eureka moment, like, oh wow, we got a dividend. But then there you are, right?
Yeah.
How then, for instance, do you get all the insights and everything that you really start to figure out, like, guys, we should start dividend growth investing. We should really take this serious. Where did the inspiration further come from, or the learning, let's say?
Yeah, I mean, the goal is to outpace inflation. And when you got your personal dividend yield growing over time, there was something that, what is it in English? Just let me check. That convinced me to go further there. I'm sorry. And like when we bought in the COVID crisis BMW, then it was pretty cheap. So now we got a pretty high personal dividend yield there.
Okay.
And and then we shifted from like the big technology winners in our portfolio, like Tesla, which went crazy after COVID. We were fortunate enough to have bought it before the crisis, and then we sold Tesla. Not all of them, but like 80%, I think, and then put those gains in other dividend payers, like the real boring stuff, Procter and Gamble and Pepsi. You know.
Yeah, if you start talking about those at the birthday party, people fall asleep or walk away from you.
Yeah, it depends on the birthday party. Here in Germany, we do have like a gathering of shareholders sometimes in a restaurant, and we say Stammtisch. I don't know if you know the term. And of course, then we all are very happy to talk about our shares. But in normal circumstances, the people are like, stock market, oh my God, it's dangerous. Go away, you witch, or something like that, probably. Yeah, unfortunately.
I know I think there's a lot of misunderstanding about investing, and there's a lot of dogma also, I think, around this, and some taboos even, right? Like I often say, I've been grown up with like, better save for a rainy day. Yeah, and don't put your don't gamble your market on the stock market because you may lose it. Yeah, yeah.
Yeah.
It's I think it's a scarcity mindset, which I've been also born and raised with. But like in my case, if there's not a lot of money in the family, yeah, then every euro matters, right? And it becomes different when you can earn more than you spend and you have something left. Then suddenly you start to think different. At least that's what I noticed. And
Yeah,
and
that's true.
and have you, for instance, are your family and friends like aware of what you're doing? Are you openly talking about it? And if so, how do they respond to it, to what you're doing?
Yes, I always talk to family and friends about it, and I influence them to also invest, but only if they want, of course. And
Yeah.
my mom and sister, we are pretty close, and I also manage their portfolios, so that's very exciting. And we're always like, "Hey, mom, your stock went up." And sometimes my mom reads something in the newspaper and tells me, "Oh, Lara, please buy the stock for me," and I do it. And she has a hand for it, I have to say. And yeah, it's pretty fun. I gotta say, and with friends also, I'm talking about that they should buy some shares to prepare for retirement, or maybe early retirement if it goes well, right? Yeah.
And what is your personal goal, Lara? What would you like to achieve with your investing?
Yeah, maybe it is like early retirement, or at least have more money when you're old, and have some dividends. Could be like an extra income, right?
Mm-hmm.
If you hold your shares long enough. Yeah, that's my goal, actually. Yeah.
So what I'm noticing, that over time my thoughts are all the time changing a bit, right? So in the beginning it was really much like, okay, now the moment I'm covering my expenses with dividends, I'll quit. Yeah. And now I'm, let's say, maybe 2-3 years away, and I'm thinking like, I kind of like my job. Not so much maybe, well, the work as well, but even more like this, the people that I hang out with. Maybe I should just start working part-time. I can't see myself, how you said, do nothing and just sit and observe the flowers growing. Yeah. So it's really, really interesting how the mind, through that boring middle and everything, starts wandering around. And it's almost like every 2-3 months, my story is a bit different again. Yeah. So, which is also really interesting. It's so hard to say what you will be doing once you are hitting that goal. But at least I know that what I have now already, I don't know if you experienced that yourself, but the mental freedom already, like that you can effectively say F you. Yeah. And because I could drive Uber and cover the gap now. Yeah. And this is so liberating.
Absolutely. And sometimes when you buy something, you think, hey, that was just sponsored by Pepsi, right? From the dividend I received yesterday, which is also pretty nice.
Exactly. Not many people can say that, right?
Yeah.
So I also calculate each year like which expenses are already covered. So for instance, I know I have already benzene and electricity for the rest of my life, right? As long as it keeps growing above inflation. Yeah.
Yeah.
So and my mortgage is almost covered, and all the others, right? So it's really nice to think like that, how your expense categories are already covered, and you don't need to worry about that anymore in your life.
Yeah, and it's also nice if the gas prices, for example, rise, but at the same time you got like Total Energies, for example, and they are raising the dividends because they are making more money, so it eases the pain a bit,
Exactly.
It's nice. Yeah.
So then you started in 2020. What has been your biggest learnings then so far?
Oh yeah, that's interesting questions. One of my biggest learnings so far was that not every company or industry I admire is also a great investment, like the gaming industry. I'm also a gamer, a bit of a gamer. And I remember the CD Projekt football. Do you remember this? It's
Definitely, because at work, many people were buying it around the release.
yes, and they made the company made so many great games like The Witcher, and I was super hyped, and I was sure that their next game, Cyberpunk, would be amazing too, and with Keanu Reeves in it. And I was like putting some money in it, not too much, because I knew it was a hype and it was a bet that the game would be a success, and but it wasn't. So the next day it went down. I'm not sure how much, like 20%, and it went down and further down and so on. There was very disappointing. But I learned that not because I like the industry or the company that they will be successful, right? So always keep a close eye to the numbers and what the CEO is saying. Also, Embracer Group, very disappointing in my portfolio. Should have sold it many weeks ago or months better. Yeah.
It's interesting what you say, because Peter Lynch always says, "Buy what you know," right?
Yeah.
Here, but
it's not always working.
No, but because what people often forget, that later in his book, he's teaching people what earnings per share is, what a price to earnings ratio is, what a PEG ratio is, and usually people may not even reach that part of the book or forget it. But what he's really doing there is like, okay, buy what you know, but also do at least some basic fundamental analysis, right?
Yes. Or maybe I wouldn't buy any game developers anymore, but maybe the hardware providers like Sony, Microsoft, Nintendo. They are like more diverse in their products, and they are doing pretty well, therefore, in the portfolio. So that was one of the biggest learning, I have to say. Also, investing in football stocks is not a great idea, I have to say. So we are fans of Dortmund, Borussia Dortmund in Germany, and we have some stocks from Dortmund. So every time now Dortmund loses a game, we are not only disappointed with the team, but also with the stock, who is like minus 50% right now in the portfolio. We haven't put much money in it, right? Because we know it was a bit of a gambling stock. But there was a failure, and we wouldn't do this again. So there was a good learning. But Dortmund pays a dividend this year again.
So did they sell someone?
Sorry?
Did they sell someone?
Yeah, they did. The famous player in the European Cup now. What was his name again?
Bellingham.
The German one. Füllkrug.
Oh, yes.
Yeah, they let him go. So from a sports perspective, I really don't like the decision, but financially it was a good decision, I guess.
You got a dividend for it.
Yeah. I would give the dividend back, though, if Füllkrug would return to Dortmund, but okay.
Just bring back Jurgen Klopp and he'll start winning for you again.
Yes. That would be amazing. They're probably too expensive.
Nice.
Also, I think a learning is that I really do believe that more people should own stocks. And I think there would be less envy in society then. Just imagine every person in Germany would have Porsche shares, like the car maker, the AG, right?
Yep.
So every time we see now a brand new Porsche on the streets, I wouldn't be envy, but I would be happy, like, hey, great. So this seems like my company is doing well. So I'm happy for you that you bought this car. So my shares maybe go up. That's always one way to look at this.
I really like that thinking, because there's a tendency sometimes in society that they say like, people with wealth, they need to pay more tax and share their contribution. But I think your mind starts to shift if you own businesses in your local environment or in the country, because you feel more of a sense of ownership. And because of that, you start to understand what is needed for a business to grow. And that requires also a certain investment climate, right? And yeah, I wish it would be a bit more popular actually in Europe, and that we got it more. It's not so much at school, because I don't know about you, but I had at school at economics, we were calculating annuities and everything just when I was 13 years old. So it's not like we don't get it, but the whole culture is not there, right? Here in most countries in
Absolutely not.
Europe.
No.
Yeah.
And I didn't even had this in school, like economy. No, I had other subjects. Yeah, unfortunately, very unfortunately.
Yeah.
Yeah.
And maybe a bit of a sidestep, Lara, but what's for me so interesting, right? If we look at the statistics of the podcast, 95% is male. Yeah, and we see this also on internet, on Twitter a lot, right? It's male dominant.
Yeah.
Why do you think this is? And what are your personal feelings or thoughts about this?
Also, I think it's come from, it's historically grown, of course, like women and men have been considered equal in Germany for almost 70 years now, like since 1949 officially.
Yep.
But still, the first woman in Germany was only able to open her own bank account in 1962, like without permission of her husband, and also deciding for themselves to accept the job was not possible without the husband's okay, which is crazy when you think about it. Yeah. Even in the 60s. And I think that's part of why women are not so active yet in the stock market environment. But of course, there were exceptions that proved the rule. I don't know if you know about it, but the famous Empress Elisabeth of Austria, she also had her own stock portfolio back in the 19th century. But of course, thanks to her special social standing and the permission of her husband, the emperor. But she invested successfully in the Austrian railways. And she was a bit like an early Warren Buffett. So just a little fun fact on the side. But back to the subject, I do see a positive trend where more and more women are interested in investing in stocks, which is great. This year, for example, I attended the Invest Financial Fair in Stuttgart here. And I met many very nice, intelligent women there, and the men were genuinely supportive for the women. And they also say, "Oh, we need more women here. So good to see you guys." And yeah, that's just makes me very positive towards the subject. Yeah.
And it's actually pretty well known, I think, that women usually are better investors because they can kind of deal better with the emotions and think more long term. That's kind of the saying. But did you know that the most iconic dividend growth investor of all times is a woman? It's Geraldine Weiss. She's called like the Dame of Dividends, and she wrote the iconic book Dividends Don't Lie. She passed away quite recently, but her notes and her everything that she wrote and her book is it's one of the most foundational books really about dividend growth investing.
Oh, that's great. I didn't know about her. Thank you so much. I just wrote down the book title. Definitely.
I will share you a link. I will
that's
share
great.
you a link. But
yeah, thank you.
She's the Dame of Dividends.
Great. That's cool. I thought I would be the Dame of Dividends, but not yet.
Oh, you will be. But also, it's funny, right? Because you can really see strong performance. For instance, I studied Fresenius one time. And I believe Fresenius was almost dead. But then one of the women, one of the daughters or something like that, who didn't carry the last name, she really made these two companies really huge, right? And I think she is an iconic person in Germany as well. I just forgot the name. But also when you think about Fresenius, that where they have medical care and the hospital business, there's really a strong woman behind it that really created this company as what it is today. They've been struggling a bit in the last few years, but there are many of such stories when you think about iconic European companies that have been at the brink of bankruptcy, where a woman stood up and really brought it to the next level again.
Yeah. I mean, it was always obvious that women are just as smart as men, right? So they just didn't have the same rights to do
exactly
to do so. Yeah.
So maybe just shifting back then onto the topic a little bit. What are your top 5 dividend growth stocks at the moment?
Yeah, my 5 top dividend growth stocks so far. I would say I have to say Broadcom right now.
Okay.
It's not European, I know, but it's just an amazing stock. I consider the industry and economic environment extremely stable and growing right now. They raised the dividends in the last 5 years for 21%, and my personal dividend yield is not 9% right now.
Okay.
And also the whole position is like over 100% in the green area. So that's one of them. Also BMW is in my top 5 dividend growth stocks. Although everyone says, oh no, German car makers, stay away from them. And I know it's a pretty cyclical industry where the earnings situation can fluctuate greatly. But yeah, I think I mentioned in the beginning that we collected the stock shortly after the COVID crisis, so we got a good buy-in. And I like the stock, I like the company, and I think they can be able to become a great player still in the future car business market. Also have to name Munich Re, like the reinsurer. Allianz
I love that one, Munich Re.
Yeah, you have to. And Allianz is a what do you say? It's a Kunde. What is this in English? A customer of Munich Re. So yeah, very nice dividends, stable economy. I love it. Deutsche Telekom also is a favorite share of mine. Position is 40% in the plus. The personal dividend yield is 15%. Pretty nice. I like their stake in the T-Mobile US company, and they should benefit even more from using AI. The people using AI, and they need to have a great, stable online connection and stuff. Was it already 5? No, it wasn't. So let's name a stock that has not such a great dividend growth right now, but I think it's also a profiteer of the AI boom by building data centers, and it's Hochtief. I don't know if you know it. It's a German construction company. It's pretty famous. Just, yeah, maybe I can inspire you to look into it.
Yeah.
It's Hochtief.
What's the ticker? What's the ticker symbol for that?
Oh, that's a good question. Just let me. I'm not sure what the ticker is. Oh yeah, let me check. Oh, it's hot.
Hot.
H-O-T.
And Lara, no Hornbach. I bought some Hornbach the other day.
Oh, that's nice. Is it cheap right now?
No, it's not cheap. I think it's, but there's a quality behind it. Let's say like that. But it's for me an initiating position, so I wouldn't consider it cheap. But I know this company from still living in the Netherlands, and it's just a really, really great do-it-yourself shop. And I wanted in my portfolio, so I kind of bought an initiating position.
That's great. I love the economy. I do have Home Depot.
Yeah.
Yeah. I lost Hornbach out of sight somehow.
It's a founder-led business.
Oh yeah.
Yeah. So it's still it's now family still. It's family owned still. And yeah, they have a strong footprint, not only in Germany, but also 10 or 12 stores in Czechia that are actually growing quite quickly. I think they need to do a bit of a better job in Germany to get the growth. But, it will never be really a big position maybe in my portfolio, but it has a place.
Nice.
There.
Yeah. I have to recheck Hornbach again. Sounds like it's pretty boring business, right? Dividends incoming. That's what we like.
Exactly.
Exactly what we like. I think from your list, Broadcom is the one that we missed the boat on. When we started this podcast, I think it was episode 4 or 5, we had a guy from South Africa, Dividend John, and he must have emailed me every week on Twitter and before he was on the podcast saying, look at Broadcom.
Oh,
And I
great.
never did. And
Oh, no.
when I look at the share price, I kind of get a little bit sad. So I missed the boat. But
Yeah.
so happy, like you got in on these. They had some serious run up in share
It's
price.
really great. And they do share their success with the holders, right? With increasing the dividend. And also, I think they had a stock split recently, which is also, I like stock splits, I have to say, when it's not a reverse split.
Yes, because it feels like you get more shares.
Yeah, and I do think people are buying the shares when it's a bit less expensive, when the company is good. I really do think it works somehow. And I never say no to more shares in my portfolio for free.
And then if you look at your portfolio, then which stocks do you not own yet that you wish you owned, or what's on your watch list?
I got quite a huge watch list, but I have to say, Mondelez, you know, the Milka chocolate producer and the Philadelphia producer is kind of a favorite stock I don't own yet. The revenue is growing. They have some pricing power. The chart looks stable. It's not. It's easy to understand. That's like a stock I would like to buy. Also, Airbus is very long on my watch list. It would not only benefit from Boeing's weakness right now, but unfortunately also from the unstable political situations around the world. Also Sixt, I don't know, do you guys know Sixt, the car rental company? I'm not sure when they will walk through the valley they are walking through right now with the residual value issue with the electric cars they bought. But the business model is still promising in my eyes. And I also have a heart for special dividends. And they sometimes pay special dividends when the business goes well. But yeah, I still have to buy it. My first stake in Sixt.
Okay.
Mm-hmm.
And I hear some of those companies, right, like Airbus and such, and they tend to, well, Airbus maybe a little bit less, but some of those companies like Sixt, they tend to be cyclical of nature, right?
Mm-hmm.
Do you buy this
Absolutely.
company to hold forever? And
Yes.
also, do you mind if they cut the dividend from time to time?
That's a very good question. And normally, when nowadays I buy stocks, I intend to hold them forever.
Okay.
And if a dividend cut is coming, that's a very, very good question. I think I read today about Warren Buffett when he bought Geico, the insurance company.
Yeah.
They before he bought it, they cut the dividend. But he said that was a great step because they were refinancing their own company. So they said we were cutting the dividends now and putting it into the company again to expand and stuff. And I think when that's the reason for a dividend cut, and then it's okay. Then you have to take a closer look at the numbers again, and then you don't have to. I wouldn't go so far and say when you have a dividend cut, I'll go there and sell the stock right away. That would be stupid. Just look at the reasons why and then decide what to do. Yeah.
Yeah. Have you had any dividend cuts in your portfolio?
Yeah, I did. Just I have this great app, you know, Divi Diary.
Okay.
There, I got all my my dividends list. Just let me. The last dividend cut was from. Okay. No, that was just for. That was just because of the English pound. Oh no, I don't have. No dividend cuts here. It was just like here's Diageo. and Unilever, but
Yes.
this is only because of the English pound. So no dividend cuts here so far in the last 7 months.
Nice.
Awesome.
Nice.
It's working.
Oh, we were a bit afraid that Unilever would cut the dividend because the CEO suddenly changed the dividend policy to a sustainable dividend or something like that, and took out the word growing or something like that. So, but they just hiked the dividend by 3%, so we feel a bit more comfortable again.
Really,
Yeah.
yes. And also the stock is doing quite well recently,
Mhm.
Unilever.
Yeah. Second Life. I mean, Derek sold everything before the run up.
Of course, you're welcome.
Oh, no. Yeah, a friend of mine too, I think he was thinking about selling Unilever, but he didn't. And now he's, thank God I didn't do it. So yeah, went up from 44 euros in May to now like 58 euros a share. Yeah, it's pretty good.
We all make our mistakes because, for instance, Derek sold Unilever. I kept Intel. Yeah.
Oh, but
Yeah.
Intel, what do you say to the news today that they plan on maybe selling or splitting off some business parts?
I saw the headline, but I have not read it, so I can't really have an opinion on it. But I mean, the CEO is just praying each day on Twitter, and
Oh, I don't follow him. Okay.
I don't mind that he's religious, but at a certain moment I start thinking like, well, nobody's listening to your prayers.
He's really praying?
Yeah, I check him out on Twitter.
Oh, okay.
He's posting all those verses and everything, and then under the tweets you typically see like, bring the stock price back up or fix the foundaries.
Leave God out of this.
Yeah.
Oh,
yeah,
man.
exactly.
Okay, I have to check
Yeah,
this.
so maybe that should be a next fire question. Do you prefer a CEO that prays?
Or Elon Musk?
Yeah.
That would be a tough one too.
Yeah. Maybe he's praying to Elon Musk, buy my chips. Yeah.
Oh, yeah, maybe.
So maybe then we might finish up on one last question and we go to some listeners' questions. And that is, what advice would you give to your younger self, or anybody that's about to consider starting investing?
First thing I'd say is start as early as possible with investing. Time is one of the most powerful tools you have in investing, and the earlier you start, the more you can benefit from compound interest, which allows your investments to grow exponentially over time. So even small amounts can turn into significant sums if invested wisely and given enough time to grow. So start as early as possible. And I'm still sad that I didn't start earlier myself. So just look at what 5-10 years can make a difference, right? It's amazing. And also always educate yourself, read books, talk to people who also invest, and use social media wisely. In that regard, who you follow, who you listen to, like you guys always share great information on X and stuff. That's also very helpful, I think.
Yeah. And do you have any favorite books, or what books would you start with?
I have to say I haven't read too many books about investing yet, because I have so much input via social media. And when I do read books, I always read my crime books and stuff, or historic books. Yeah, I do have to read more. That's definitely on my list, and I probably will start with Dividends Don't Lie.
Yeah, sounds like a good one. You might enjoy that.
That's definitely on my list. I did the last investing book I read was by Lisa Osada. It's a German, I don't know, maybe you know her. Lisa is a German influencer in a good way for investing. And her book is called Aktien Life Balance. It's kind of like for beginners who want to start investing, but it was very nicely written, and she explained how she started with investing and how she approached to find new stocks to buy. So there was one book I can recommend, definitely.
Good, nice. We'll check it out.
Great.
So thank you. There was lots of cool stuff in there. So really inspirational, I have to say. But we'll jump on to some of our listeners' questions if that's okay with you.
Yes.
Centrino had asked about your top dividend stocks, top 3, but you gave us your top 5 already, so we'll skip over that one. Sebastian has asked Fortuna Düsseldorf or DEG.
I saw it on X, the question. Of course, DEG, because Fortuna Düsseldorf is the soccer team in my hometown, and I'm not too interested in soccer here in Düsseldorf, but just DEG is the ice hockey team here. So it's our favorite team, and of course I choose DEG. Okay. Yes.
Nice, easy question for you. So.
Very easy, very obvious. I think Sebastian knew it before. Yes.
Jean Christophe has asked, when you're looking at cash flow, do you look at stock-based compensation?
Oh yes, that's always a thing you have to look into, and when there's too much stock compensation inside the company, I don't like it too much, I have to say.
What about you, European DJ?
Oh, this is really, really tricky. I think when you're like an IT tech startup, if you don't give stock-based compensation, you will not have the best talent probably. Yeah, because it's standard. So I do believe that in the early years, also after the IPO, this is probably a fact. The question is how much. Think about Palantir at the moment, how much stock-based compensation they do. Facebook did the same, and I think it's needed for their growth. But when it comes to the companies I invest in, the kind of the more mature businesses and such, I do believe stock compensation should be there, but it should be just a little bit. It should be like kind of part of the compensation package of the employees. Like to what you said before, Lara, if people own a little bit also in their company they work for, they have then some more sense of ownership for the company as well. Hopefully also a bit more loyalty, but this should be maybe like, I don't know, 5-10% of their annual take home. And usually a company can then use stock-based compensation because it's tax smarter, let's say, but then buy it back straight away in the next cohort, so that we as investors don't see too much from it. But it should be a very low percentage of free cash flow.
Yeah, great point. Great, I totally agree.
Hussein has asked us about a company called Carlyle, ticker symbol CSL. Have any of you guys heard of them before?
Carlyle?
Yeah, Carlyle. I looked into these guys before, so I believe they have these special kind of roofs, so roofing company.
Okay.
They're in the construction industry as well. 21 year dividend growth. They have like a 15% dividend CAGR over the last 5 years. I really like the company, but the only thing that put me off was the dividend yield was, less than 1%. And they've had a really, really strong run up in share price as well. So I feel like I've missed the boat, a bit like Broadcom. I've missed the boat in these guys. I think 2020 was a good time to buy these. I procrastinated far too much, and I just see downside from here. I don't see buying them and their share price going up too much, and the dividend yield is too low for me to get involved. So I don't see too much upside for me, but I think it's a great business.
Yeah, I don't know the company, so, but maybe what I heard now, maybe wait for a little pullback.
Yeah.
And check again. Yeah.
Maybe a big pullback.
Yeah, a huge crash.
Yeah.
Maybe.
Manny Mystery has asked us about the world that we live in today kind of reacts every time Jerome Powell farts. So whatever he says, the market goes up or it goes down. There's so much volatility around what he says. When do you think volatility is actionable, or is there too much time misspent with this type of sentiment these days? So European DJI, I let you answer.
For me, I don't, I don't really look at such information. I just like that the interest rates went up, so that I got to buy some really nice real estate investment trusts. So he asked, like, when is it really good to have volatility? I think that's when there's really a crash, and then I always say, don't go into the blast zone. So we saw that with COVID at the time. Yeah, then don't buy an airliner. Yeah, during COVID, because the dividend will get cut. That's quite obvious. But you could buy other stocks at the time, like Ahold Delhaize, insurance company like Chubb that I bought. All of these, they were out of the blast zone. Yes, they may have a little bit, a small relation to it, but something like Albert Heijn and Ahold Delhaize, they actually benefited from it, right? So that's my approach to this. When I think about volatility, then I really believe that what Peter Lynch says, volatility is my friend. But you know what? If I start spending my time on understanding the macro environment and geopolitics and what Jerome Powell is saying all the time, I lose my time to study great businesses. And I think I benefit more from finding a great business that I invest in than studying what the analysts are saying.
And I agree. I totally agree. I also have to say sometimes the market just makes no sense, right? So
you don't believe in the efficient market theory?
I do, but I don't know what it is. I don't know what it is, but sometimes I do lack an example right now, but maybe after some earnings, just like a slight miss in a stock, which is not totally overpriced, maybe like Nvidia nowadays. Some people may say it's not overpriced. Then you can understand why it goes down after an earnings miss, or the beat wasn't big enough. But I think sometimes the volatility nowadays it's too huge, I don't know. Sometimes it doesn't make sense at all. So
I can give you an example where I know, and it typically happens once a year, that you see that it clearly makes no sense. So in 2016, when I was investing, Amazon bought Whole Foods. And this would have been the nail in the coffin of all the supermarket chains around the world.
All right, yeah.
I mean, imagine Ahold Delhaize buying for 16 euros and 15 euros at the time because Amazon was going to kill the whole industry. Yeah, well, you just know it makes no sense. First of all, the market share that they would need to grow and the expansion that they would need to have would have been insane. But let's assume it happens. Nobody wants to buy all the time at the same store. There's more than enough space for competition. So you just, but there was kind of the narrative that all the rest will go out of business because of Amazon. Yeah,
so they went down the other.
Like almost 40-50%. Yeah, you could get Walmart at almost a 4% yield at the time.
Oh man, that would be a dream.
Yeah, well, it was.
I hope you bought Walmart.
Yeah, I bought not Walmart, but a lot of Ahold.
That's great. That's great. Yeah, made no sense. Like, that's a great example. And there were other examples like that where people say, "Oh, this is disrupting the whole economy there," and it never happened, right? Like Tesla would have robo cars nowadays already, and would disrupt Uber and stuff. Never happened.
Yeah.
No.
Yeah, I agree that it's definitely not an efficient market. It's too.
I think Peloton.
Yes.
I was because it was so funny. There was someone talking about mode today on this week on X. So what I did is I started searching on X for the term mode in combination with some of those high flying companies from 2020 and 2021. So I did mode and Peloton. it's so funny to read what people have been writing at that time about the mode of Peloton and and the service business of Peloton and this and this and this. And I feel like it's a bloody bike with an iPad on it. Yeah. So,
I was never interested in a Peloton somehow. I never understood the hype.
Yeah.
me
Crazy.
neither.
No.
Our friend Mike has asked us about history. He said the saying goes that history repeats itself. So we should be able to learn from it, right? So he's asking, when looking at the financial markets today, what do you see that's similar today than in the past, and what can we learn?
Oh, that's a good question.
It's a tough question.
Yeah, it's pretty tough. Yeah, I think nowadays you say that history isn't repeating itself anymore, but I do think it is actually, because the humanity doesn't change. Oh, that's a tough question, right?
So if I may ask, what's the market then today? Because I've not been checking the market as such. I saw more green and such, but is it because of the Powell last week saying that stocks start to rise? Is that what we're talking about?
Yeah, I think inflation data was a bit under the forecast today from consumer numbers in America. So I think that was the reason.
Yeah, okay,
why
so
stocks go
Mike,
up.
my answer, what I learned from the past is that stocks go up and down.
Yeah, and in the long time, it always goes up, right?
Yeah, until it
In the
doesn't.
end.
We will not know until maybe the American Empire ends. Who knows?
Yeah.
But I hope to not live at that time anymore. Yeah.
It's such a tricky question, like especially coming out of inflation. Inflation is lowering. We have interest rates fluctuating. We see a weak consumer, and so much happening geopolitically. So this market is quite tough. I don't study the history.
So what you can theoretically, right? If you purely look at the interest rate going down, that means that capital becomes more cheaper. To borrow. That means that you can use lower discount rates to value a business, and therefore the business value should go up. It makes a difference whether you take a discount rate of, let's say, for your net present value calculation of 6% or 8%. So it inflates the stock price. So typically, if the interest rate goes down, the valuations go up. So the stock price, all else being equal, should go up as well. But it's so hard to say, because you have like geopolitics at the moment going on. We have a war in our backyard here in Ukraine. Anything can happen anytime. With the interest rates, the only thing I can say is that, and the market has so many things going on that for me, this is uncharted territory. I can't remember in the last 10 years that I've been investing that there were so many storylines at one time going on that could be a threat to the market. We had Greece in the aftermath of the great financial crisis, right? The debt crisis there. That was just Greece. And there was always something that to be afraid of, but it was like one, maybe two things. But now you can name probably 5, 6 things. And that makes this market crazy and very unpredictable.
Very well said. Also, what you can learn from history is when interest rates fall, then the gold price rises. So that's why people are buying gold nowadays. But not only for this reason, but also, like you said, DGI, that there are several fires in the world right now that people are looking for the safe harbor gold again, right?
And then the last question is from Thomas, and he's asked us about a real estate investment trust called Alexandria Real Estate.
I hear a lot about it recently. Yes.
Any thoughts on them?
I haven't looked into them, but I do like. It's a REIT, right?
Yeah.
I do like the idea of a REIT, and also that they have to put out their gains as a dividend, right? So, but I haven't looked into Alexandria especially yet.
Yeah, me either. I've got a couple. I've got Realty Income, Agree Realty, and Vici, and that's about as much as I want in my portfolio. So I haven't looked too much of Alexandria, but I do hear great things about him. I think it's Dividend Seeker, who's also on our show, that is really big into Alexandria real estate. And
a lot of people have them.
yeah, I'm pretty sure he has videos on YouTube. So if I can find them, Thomas, we'll link to them and we can send them to you. But yeah, I've no other opinion on them. So yeah, so that was the last question. Usually when we have guests on, we ask them for a stock pick of the week. And I know you mentioned some stocks earlier, but is there one company that you haven't mentioned that you feel like you should?
Yeah, one that I haven't mentioned is, and it's also one I don't own yet, but I would like to own someday, is Blackstone. So you probably know them. They provide the opportunity to invest in the private equity area.
Yeah.
And I love that. And this was probably the stock I would like to mention in the end. Like I love the whole private equity area to invest. I own the German Mutares. They do the same. I don't know if you know them. They are also in private equity active. And latest news surrounding the business is KKR bought the German OHB, which was also on my watch list. So they bought it before I could buy the stock, unfortunately. But yeah, I say Blackstone is a stock I would like to mention in the end.
Blackstone is a company that I know well, actually.
Oh, great.
I was lucky to buy them at around $56 in around that price. I think they're $140, $150 at the moment.
Did you buy back
yes.
then? Oh,
Yeah,
great. Congrats.
And if you like asset managers, obviously KKR are decent. And also I've been looking at, with the help of one of our listeners and subscribers, Brookfield Asset Manager. They're quite good to look at as well.
Yeah. Love it.
Well, Lara, thank you so much for joining us today. It was really, really, it was really interesting to hear you speak, and I made some notes already, so I'll definitely look into something like Hochtief.
Oh, and, yes, hot.
Yes, ticker symbol hot. And I hope you enjoyed it as much as we did. I can see a smile on Derek's face, so I'm sure he's also happy with that. And yeah, is there any last words of wisdom you would like to share with our audience before we close out?
I just have to say thank you so much for having me. It was very interesting and very nice to see you guys and talk to you about everything. And to everyone listening, but I guess everyone who's already listening is also following you on X already. So that would be my advice I would give anyone. But I think I don't have to, because they already do. So
yes, and we will make sure that that we also share your Twitter handle on our platforms where we are, so that people can find you. Is Twitter the only place where they can find you, or are you also at other places?
Yes, I have Instagram, but it's only a personal one.
Okay.
And just X.
So guys, look at the show notes. You'll find the Twitter handle of Lara. Yeah, and Lara, thanks so much. And yeah, maybe see you again one time.
Yeah, it would be great.
Awesome.
Thank you so much.
Awesome. And to our listeners, thanks again if you've listened, and thanks for all your questions, and we will see you all next week. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.